The Public Investment Corporation has lashed out at Anglo American, whose chief executive Cynthia Carroll resigned on Friday last week. Its frank announcement included criticism of Anglo's board composition, which it says lacks emerging market representation. There was also pointed reference to poor capital allocation decisions. Our guest tonight, Elias Masilela, CEO of the Public Investment Corporation. Welcome. Thank you for coming through.
Thank you.
And I must say, I have to admit I was slightly startled when I read the media release on Friday, but it's really good to see when commentators and stakeholders are honest. And at the beginning of the statement, Elias, you concede that these were difficult times cyclically for the resources sector, but you also point out that there were some poor capital allocation decisions. If you could elaborate on your particular concerns.
Okay. Let me first start off by qualifying your introduction. Lashed out, I would hold back a bit. I wouldn't say we lashed out. And I think there's background to it. We've been watching the company for quite a while now. And if you look at its performance over the past 5 to 8 years, it has been diverging from its peers. And that means it is not a short-term phenomenon that we're picking up. It's a structural imbalance, which basically means either the management was not doing what was expected of it, or the strategies which were being implemented were not yielding the dividend that they were hoping to get out of the positions that they were taking. And the reason for that is because if you think about the negative market impact that the mining sector has been exposed to over the past while, it has been affecting all the mining companies. But it seems like this particular one was affected much more than the others. That means it's not only market factors that have affected it, it's also internal factors which need to be considered. And would like to think that management had a role to play. Now, we could be wrong, but in our engagements with the company, we couldn't find an alternate view to our perspective that management has contributed. And this is an engagement that we've had with them for a substantial period of time, up to a point where it became very clear that we could not continue defending our investment in the stock with our principals. As a result, we escalated the discussion to a level above us to make sure that the seriousness of our observations of what is happening in the company is dealt with at the right levels.
Who is the level above you?
The board, the board of the PIC, and the board of the GPF, the Government Employee Pension Fund. And what we ended up having to do was for the two chairpersons to write a joint letter to the chairperson of Anglo, indicating or spelling out our concerns that we've picked up.
So do you believe Cynthia Carroll's resignation is a direct result of the pressure brought to bear on her through her own chairman?
I wouldn't want to speculate on that. I almost feel like the hangman here, where after the verdict has come out, which is a function of the financials, the hangman remains to press the button. But in our view, we think that it's a combination of factors. It cannot be the CEO alone. We think that the board needs to be accountable for a number of reasons. One of the reasons is dates far back to when they re-domiciled to London. It is not clear to us the extent to which the decision to go to London has improved its performance. Because you will recall that one of the fundamental decisions for the move to London was to improve the efficiency of the company by reducing the cost of capital in order to expand from a base such as London. But it is not clear whether that has paid off. That was the one thing that is of concern to us. The second one is the complexion of the board, which is predominantly European and American. It is unclear to us the extent to which the board understands the environment that they operate in, which generates the bulk of the profit of Anglo. That is South Africa, and I would say the broader African continent. And what we've seen is that over the years, Anglo has reduced its participation on the continent, on the rest of the continent, when other mining companies have actually benefited by penetrating the rest of the continent and picking up good returns in their investments there. So our view is that there may be a focus away from the continent because of the complexion of the board. Even there, we may be wrong. We need to be convinced that our observation is actually not matching up to what numbers we're looking at. So it is very clear to us that there's a lot of changes that need to take place. A refocusing needs to take place. And one of the ways in which you can refocus is bringing people that understand the market much better.
I know my co-hosts have some questions, but I just want to point out here, you are the largest South African-based shareholder in Anglo's at 7%. Nevertheless, 7% is a relatively small holding. Don't you think then that you seem to want and seek control far beyond your representation as shareholder?
No, not at all. Far from that. Our control is to the extent to which the entity delivers and meets the expectation of the shareholder. And if an entity is operating optimally, we would not be making the demands that we're making. But to the extent that we think that we need to have more say in the enterprise and to influence the direction it is going, it is on those bases that we would like to have better say. Whether it's direct or indirect is something that we can work out. And our view is that a reconfiguration of the board does not necessarily mean that PIC wants a board seat. It's a reconfiguration that makes sure that you bring in people that understands the market better than what we currently observe.
Elias, this is a very good example of a trend in the South African fund management industry of more shareholder involvement or shareholder activism. I don't particularly like that term. I don't think it describes exactly what we're trying to achieve as stakeholders. You know, sort of, I don't know, 10 years ago, 15 years ago, your biggest action as a shareholder was if you didn't like something, you just sold the shares and you walked away. How do you see this trend developing in South Africa? Do you think it's gaining true momentum in the market?
Look, it may be easier for small investors to vote with their feet. It's very tricky for the PIC to do that. Therefore, what we tend to do is that if we see that there are sustainability problems in a company originating from whatever source you can think of, we would rather entrench ourselves, put more money into the enterprise so that we change it from within. And the reason for that is a very simple one. We are a long-term investor. We're in it for the long-term gain. And therefore, it does not benefit us to only behave as a short-term investor and move in and out of shares. Would rather stay in there and make sure that we channel the shares in a particular direction, which is beneficial not only to the shareholder, but to the country at large.